When the market flies like it's been doing, at least until today, you need to be selective. You have to get more choosy because you don't want to start your buying near the highs. And that is often a license to lose money. So in a day where the Dow tumbled 466 points, the S&P shed 0.34%, but the Nasdaq advanced 0.16%, I want to show you how a professional comes up with ideas in a tape that's roaring and does so without taking on too much risk that we have a quick downturn while attempting to get the maximum reward. You know that sometimes stock picking is all about not coming in on a stock that's already up 30 or 40% this year. Instead, you have to accept that you missed it. Not easy. I'm sure that all of you have one time or another come in on top of a monster move. Maybe a Seagate yesterday, SanDisk earlier today, and wish you would exercise some patience because you would have been better off waiting for your pitch. And sometimes it just doesn't happen. Pass. Let's go over first the wrong way to do it. You might have decided on Monday that it was time to own an oil producer because our government now seems to be in control of Venezuela, or at least in control of its petroleum. That was a mistake, an error. You came in near the high, and more important, if Venezuela boosts its production dramatically over the next 18 months, the price of crude is going to get slaughtered. At the same time, the banks are starting to bother me. Now, look, don't be wrong. You know, this group is chronically undervalued. I have praised it many times to you. These are tremendous franchises, but we're headed into earnings season. Do you know that in 6 days, J.P. Morgan reports, I think this, the biggest bank, it's cheap. Stock's way too cheap, actually, 16 times earnings. So why not buy it now? I am worried short term because even though CEO Jamie Dimon's a fantastic banker, he's also a really cautious person. He's not going to get on his conference call and crow that his stock's undervalued. He's far more likely to talk about the potential landmines out there. Jamie is a straight shooter. There's nothing bad about that. When things look ugly, he tends to tell you what could potentially go right. When things look good, as they do now, he tends to tell you what could go wrong.
The House of Pain.
I love that. But the media will take the comments out of context, and they're going to present him as an extreme pessimist who's worried about the next credit crisis. Remember his comments last quarter about the blow-up of a subprime lender, Tricolor, and the collapse of First Brands, the giant auto parts conglomerate? Both casualties within the same month as September last year. J.P. Morgan took a $170 million loss on Tricolor, not his finest moment, although it's barely more than a rounding error for the company. Then Jamie, on the call, lowered the boom, telling us, and I'm going to quote, I probably shouldn't say this, but when you see one cockroach, there are probably more. Everyone should be forewarned on this one, end quote. He acknowledged he was tightening his lending policies. And with that admonition, he crushed his own stock. J.P. Morgan stock dropped from $307 to $294 in a couple of days. Many people who bought it in the 300s then dumped it. They panicked. They bought high and they sold low, and that's not what we want here. And it turns out, frankly, that there really have only been those two cockroaches. But he's a cautious man. You know what? He probably doubled down on the cockroach commentary, maybe lob a bomb or two about the future of the Federal Reserve's independence or the lack thereof. Now, that's when you want to buy after he lowers the boom, not up here after you run, even after it did get hammered today on a note of caution by an analyst. So what do? You wait for the reaction to Jamie's cautious commentary to give you a better entry point. And if it doesn't happen, pass.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.